I hate annuities and you should too. Have you seen those commercials on cable news networks? Or, oh no, annuities are horrible, annuities are bad. I don't know, but a really wise person once told me, leave right, wrong, good and bad to church. And in the business world, think about things as what's effective, more effective or less effective, right? And so in order to be able to answer that question, it really comes down to us as individuals. Who are we? What kind of risk are we willing to carry? What kind of reward are we after, right? How much income do we have? How much assets do we have? How much income do we need, right? These are all questions, right? Annuities, though, they're complex, right? But they're not complex out of any kind of evil conspiracy to harm anybody, right? I always tell people that things like this are complex for two reasons. First is the regulatory environment in which the financial world operates and exists, right? These are financial products. They're backed by life insurance companies. These companies have massive amounts of regulations they have to follow. Every time somebody throws a lawsuit at one of them, guess what? We get more pages of legal mumbo jumbo that we got to try and read through, right? But that's just half the story. Well, what's the other half? Well, the other half's capitalism, right? Once upon a time, annuities were very simple. Maybe they were just single premium immediate annuities. You give an annuity company or an insurance company money, and then you choose, hey, how many years do you want to get money back? 5, 10, 15, 20, right? And they're going to give you a small rate of return, and they're going to guarantee your payments back to you, right? But capitalism demands that companies innovate, that they create new ideas and new ways of doing things in order to be able to gain more share of the marketplace, right? So year after year of regulations and year after year of capitalistic innovation occurring, and now today we have a wide world of complex annuities that are available. But for the most part, if you take a little bit of time and you get the right person to explain it to you, you can have a pretty easy understanding of what the annuity contract is and what it means for you and how it functions. Now it gets a little more complex when you get into the taxation of them, right? Annuities allow you to defer income. Now that may be good, it may not be, right? It depends on where the source of the money is. Is that money already 401k or IRA income where there's never been any taxes paid on it, and so converting it over to an annuity isn't really going to impact the taxation of it? Or is that money what's referred to as non-qualified money? Did that money come from a life insurance payout? Was it money that we had received net of taxes and accumulated in an individual brokerage account, and then we're going to put it into an annuity, right? These are just questions that in order to be able to really make the determination as to whether an annuity would be effective for you, right, you might want to answer it. And then really, how do you know how much, right? If you do determine that an annuity might be a tool that you might be comfortable with and might benefit you, should you put all your money into an annuity? I'd have a hard time believing you should put all your money into anything. So it's just best to have a financial plan that takes into account the different aspects of an annuity, the fact that it's illiquid, you can tie your money up, that whoever talked you through how much of it should use understood what kind of lifetime income benefit riders or advanced or enhanced death benefit riders were on it, what the costs are associated with it, and how much should go in and what the tax ramifications of it all are. And if you've done all that, then who's to say it's bad, right?